Along this morning and the opportunity to speak to you. What I'm going to do is I'm just going to go through very general criteria that the bank would look for in a typical lending application. Just to give some kind of general pointers, the kind of information we would look for and basically why we would look for it. If anybody's got any specific questions that they want to ask, please do so at the end, or you can pick up with me once we've got a wee bit of free time at the end of the session. I won't go into anything in any kind of particular detail. But again, it's just a kind of general overview, okay? In terms of lending decisions, okay, what does that basically entail? What are we looking at here? Are we looking at an overdraft? Are we looking at a loan? There's any number of solutions that are available for financing a business today. Not just in terms of overdrafts and loans, we've got asset finance, we've got invoice finance. What we really need to do is we need to get to the crux of the matter as to what the funding is for. If we're talking about working capital, there's different ways we can do that. We can do that again, overdrafts, loans. We can do it through invoice finance. If we're looking at asset purchases, again, depending on the type of asset, is it a property? Is it plant machinery? Again, there's funding structures that are available for that. So one of the key things that we need to understand is what the actual purpose is. Once we've got that down, we then obviously need to understand, well, what are the mechanics of this? Is it a longer term proposal? Is it a short term proposal? Again, once we've understood that, we're kind of closer to giving some guidance and advice. A lot of people just generally think that you go to the bank and the bank throws money out the door, but we need to be a bit more structured about things, particularly nowadays, and it's getting the right funding solution in place, not only for the bank, but also, more importantly, for the customer. And the reason that we do that is to make sure that at maybe some point up the line, a year or two or whatever it is, that we've actually got the right thing in place rather than creating some pressures further up the road. To help us get all the information, what we really look for is a business plan. Okay? Now, for a completely new business, that business plan is probably one of the single most important documents that we would expect to see. The business plan should give us some idea as to what the business is about, the funding that's required, why it's required, and some thought as to the longer term. Now, the difficulty is, particularly in the current climate, you can't just say what you're going to be doing in 2 years or 3 years or beyond, but what we really look for is some thought as to what the business is going to do, how it's going to do it, and what the outlook is about. That gives us a basis that we can actually ask some questions, because it's not all one-way traffic with the business plan. The whole idea is that we give some feedback. Now, we don't profess to be experts in any particular field, but being objective, you've got the opportunity to ask some pretty searching questions. And sometimes we would put people on the spot just to kind of make sure that they have done their diligence and they have put some thought into it. To help us do that, we would look for some pretty good assumptions around, number one, the business plan, and number two, the actual numbers that are involved in it. So again, we've got a basis there of what's going to happen, how it's going to happen, and we've obviously got the ability to try and kind of question and challenge some of that. And again, sensitise it as well, because if someone's predicting growth of a certain level, well, what if it doesn't work out that way? What are the implications of that? And again, that's part of understanding the business and being able to give something back. To help with business plans, obviously the bank's tied up with Smarter Business Builder, which is an online tool which helps with business plans, which helps with financial planning, and again, in conjunction with your accountant, would provide us with pretty robust information. So again, there's tools out there, and we would obviously, kind of point people in that direction. Business plans aren't just about new businesses; they also apply equally to established businesses. It may well be that there's a change of tack, there's a change of market, a change of product. Just because a business is established, it doesn't necessarily mean that a business plan won't help with the planning and lending decision. To take that on to the next level, when I'd mentioned about an established business, one of the things we would look at as well is the track record of the business. Now, that's in terms of profit, in terms of account conduct, and the reason for that being a business may well be profitable, but again, cash flow, particularly nowadays, is probably the single most important facet. So profit doesn't mean cash. So again, we need to understand, is a business profitable? If it is it generating cash? How is the cash being used? So again, that will help us understand how things are there. Security is obviously a key aspect as well, but it's not the be-all and end-all. Yes, clearly there has to be security there, but we need to understand that the dynamics are right for the business, because lending on the basis of security, that's not something that we're looking to do. So really, I'm trying to kind of get a point that there's no one single factor. There's any number of factors at play. Within the business, we're obviously looking for experience. Again, if we've got an experienced management team, an experienced owner, if the track record's there, that helps us. Because what we want to understand is that the key players in a business, do they know their market? Do they understand their market? Do they understand all the mechanics that go along with it? If a business is new, clearly experience may not be an issue, or it could well be more of an issue. But what we would look to understand there, if someone's setting up a new business, do they have experience in the sector? Primarily because what we're looking for is people not just to wake up one morning and decide that this is the next great idea and I'm going to make it work. Now it may well be, but we need to understand the ability to take that idea and move it forward. If someone doesn't necessarily have a great deal of experience in the sector, it doesn't mean that the bank won't look at a proposal. But what we would need to do is understand who their advisors are, where they're getting advice from, their accountants, their lawyers, any other professional advisors that they have out there, and understand what input they've had in helping this business move forward. Because at the end of the day, you know, there's plenty of businesses out there that started with nothing more than an idea, you know, and probably didn't have the experience of dealing with it, but they've gone on to success. So again, it's given a fair hearing, and it's just understanding that the support and the guidance is there. Other things may well be that someone has a business idea and they have to rely on other people to help make that work. That could be recruiting an experienced, you know, manager or operator. And again, it's just trying to understand some of the mechanics behind that. In terms of the actual lending decisions themselves, the key thing, as I've mentioned, is about profit and cash. I mean, clearly, if there's a lot of challenges in terms of, you know, business losing money and cash flow being very tight, we obviously need to understand what's actually going on there. So again, the lending decision goes back to the original purpose. What are we doing this for? And to understand that is to do the right thing, to help people understand what's going wrong. And if there's other ways that we can structure finance, then that's something we would certainly look to do. And ways of doing that could be invoice finance if the business has debtors. It could be asset finance if the business has got significant assets and has bought those with cash rather than putting a funding structure. So again, by understanding how the mechanics of the business works, there's other solutions. And lending doesn't necessarily just mean throwing new money at a situation. It also helps to understand if we can make better use of some of the things that the business already has. In terms then of the actual overall putting the money out the door, how the bank works is that normally we would meet with the customers, we would have some discussion, some dialogue, we would take all the information in. There would probably be some to and fro in terms of questions and answers and further information, and we would get to a point where the relationship manager would put a proposal together which would go through to their lending unit. The lending unit is not some mysterious machine. It's actually employed by, or it's actually occupied by people. There's people there who will sit and they'll read the business plan, they'll read the report, they'll understand it. So it's not just about throwing numbers into a machine and getting a yes or no answer. Usually at that point there's a fair bit of dialogue with the relationship team, and that might mean some to and fro and again with customers, but again the whole idea is that we do the right thing and we get the right structure in place. Once that tends to happen and we've come back with a positive response, it would be a case of getting the administration right, which is the bit that can take a little bit of time depending on the circumstances, but that would be, you know, all necessary documentation, there may well be security. So again, that forms all part of the whole end-to-end process, to the point where actually the money's released out the door. I know that was a very kind of potted history, but it's a very broad subject in terms of lending decisions, and there's no one single factor that makes a lending decision. It's a number of various components. Some of them are more specific to certain areas than others. So it's really a case of having the dialogue, asking the questions, and trying to find the right way of how we make things work. In terms of actually how we do that, the Royal Bank has just released a new fixed rate loan with no fees, which we believe is something of a market leader at the moment. It was just released within the last week. And we've got an established small business loan, which is primarily geared for small businesses that are looking to make a start. And again, that's a very attractive loan product. I believe that there's pretty much nothing like it out there in the market at the moment. Again, so we're very focused on helping new businesses, we're very focused on helping established businesses, And again, it all comes down to dialogue. It all comes down to being there, having the discussion and trying to work with the business to find a way. If anybody's got any questions, happy to take them now or at the end of the presentation. If anybody's got a specific case they want to talk about or wants me to elaborate more. I hope that was of some use to you. I know it was very brief and broad, but again, it is quite an in-depth subject. So happy to take any questions now or later. Simon?